Good morning, everybody. Welcome to the DYOR media. It's time. We're still going for that, otherwise known as striking here in the digital media world. Thanks for putting up with our late start this morning and my rambling intro previous to that. We got the show started now, and so I'm so glad that many of you stuck in there to wait for the technical issues to be solved. It's Tuesday, May 9th. We've got a good show for you today, as usual, of the usual banter back and forth with whomever comes into the DYOR Telegram and wants to chat about things. We're taking comments on YouTube and Twitch and LinkedIn. And we're also, I should say, we're no longer broadcasting on Twitter. Every morning I go to set up for the great Twitter feed, and we didn't have it this morning. It disappeared off of our DYOR company Twitter feed. We used to have the media creator, and now it's gone. Elon changed the rules in mid-stream here, and don't know why. Don't know why. But anyway, Twitter is good for just driving people to YouTube. You don't really get a lot of views, and it's not monetized anyway. But thank you for tuning in. As the headline says, today we're going to talk about the continuing struggles that crypto companies are having with the U.S. government. Specifically, as you can see here on the screen behind me, the SEC versus Coinbase. And Coinbase has decided to change it up a little bit and kind of fire back at the SEC, and we're going to go over that and the arcane rule of Old English law, thus the hear ye, that now applies to, I shouldn't say now applies, it's applied since the 1789 Judiciary Act or something like that. We're going to talk a lot about law here today, but it's safe to say I'm not a lawyer. And if someone says, you didn't get that exactly right, I'm getting the general concepts right. I might not get the details right, but that's fine, because all we need to know is the general concepts of what's going on so you can understand it, so you can know where to put your money. Let's see. Let's get a little shout out going here. Sorry, Vimeo. You sucked today. I used Vimeo as my content delivery. And I just send one signal to Vimeo. It records it, and then resends it out to Facebook, to YouTube, LinkedIn, to my own Telegram group, Striking's Crypto Smackdown, and wherever else I want it to go, and Twitch, etc. And it puked. It puked today, right at the last minute. And I didn't like that at all. So I have to then stream directly to all those places, which of course causes me, instead of sending one stream out, I'm having a content delivery network do all the work. I have to send it all out. So we were a little late because I had to set up 5 streams directly at the last minute. For those of you that stream and are content creators, you will know the pain of RTMP setups. Where should we get started? Let's see. Let's check on our LinkedIn friends. Good morning, everybody on LinkedIn. Thank you. We do have a crowd here today. Both of you. Thanks for tuning in. The 2 of you that are watching, appreciate it. Drop a comment. If you're live, drop a comment, and I'll get to it and answer it on the air. If you're watching on the replay, drop a comment, and I'll pay attention to them and get an answer to you as well. So as I was saying earlier, broadcasting from the Ottawa, Canada studio. As many of you know, I split my time between Chicago and Ottawa. And neither place is advantageous to crypto from the user point of view. You lose money in both places just as fast as anywhere else. Speaking of, to recap what we talked about yesterday with the meme coins. This has been, I would just say, a month of meme coins. It's just been patently ridiculous. Let's see what the greatest thing that happened all month in meme coin was this group called Pepe. Pepe, thankfully, people are taking their winnings, just like the craps table in Vegas, taking their winnings. As you can see here from the chart, It went for, I don't know, about a week and a half. Yeah, we'll give it 2 weeks. Not even a week and a half. It went from nothing all the way to blast off stage here. And then everybody said, it's time for my money. And they took their money out of it, and now the project is kind of collapsing. And people are giving it all sorts of hope by saying, look at this is a descending wedge. I'm doing the crypto lifer thing now. Don't worry, I will never take your job. And say, look, it's this descending wedge. It's getting ready for a big breakout. It's getting ready for a breakout. It's going to do something like this. Yeah. I'm not even doing this right, but I'm going to pretend. Yeah, it's definitely going to break out up to 32. This is the typical pattern of a meme coin. This is what we talked about yesterday. I've talked about this on the show many times. Technical analysis doesn't really work overall in meme coins. It doesn't work because it's not just high volume trading. Pepe has a lot of volume and it's on every exchange, so there is a lot of volume on it. But the problem is that with meme coins, there are factors outside of normal trading that influence it. Just like technical analysis works with Bitcoin very well, he can figure out things with TA. Where the small patterns are going, maybe some longer term patterns, and you have a good idea on things, and then the Fed will announce something, or like everybody had Bitcoin figured out to drop only as low as 18,000 a couple of months ago, in fact last October, and it was kind of hovering right around there, and the people that were calling it were like, hey, we're right, everything is good, and then the FTX scandal broke. And everything went in the tank after that. And so those are called outside influences on it, otherwise known as normal things that happen. So that's what busts up TA, technical analysis. And what I wanted, recapping yesterday's events, our talk, is that the meme coins have a lot of outside influence, like the devs selling off, or larger whales dumping the product, or a tremendous amount of FOMO. All of those things influence it. So while this says I've got a falling wedge here right after a big gain, that is just set up for a blast off. With meme coins, if you look at all the other patterns, if I overlaid 10 of these charts, it would just give you, it's going to give you a little bump, but on the retest, look, I'm using more of their terms. It'll come down here and then blast off a little, but then when you want to see it come back to this line and as they say, hit a retest, and then go bang like that. But generally what happens is it comes along this line and goes, and you lose all your money. Unless you sell and take your profits and leave. And if you are one of these people that bought up here, don't hold it to the end. Minimize your losses. There's times to dollar cost average into things, but with meme coins, it's time to get out. It's time to get out. The FOMO is over. And that was the recap from yesterday's show. I guess, you know what, while we're at it, let's just go. That was Pepe. Let's give Newt BNB a try. Let's see where they ended up. They've lost half their value, more than half their value in 2 days. They're done. Let's see. You couldn't see that. Here's Newt. Dunarini. Let's see. Turbo. What happened? There's so many of them. You can't even think about it. Turbo ETH. That's the one with all the money in it. This one's also doing the same thing. This blasted off. People made a freaking fortune. Again, went up here. Started out really low. Went up, dropped. God, it looks like from the launch it dropped 2-0. So it's more than 100x. And then people said, time to take the money out. Remember, all these really high blast off here, all that is providing what, ladies and gentlemen? Providing exit liquidity. Right. Your money is going directly into the pockets of the people that are selling here. So you don't want to do that. So if you're down here, don't hope for the best. It's a meme coin. They don't have any outside any money. They're not using their Visa or MasterCard to charge for services to bring money in. They're not going to be increasing their earnings per share by selling product. Get out. Out. Time to go. Party's over. Hold on a second. Just got pinged by Vimeo again. Let me see what kind of lousy excuse they have now. Oh, thank you for contacting Vimeo and have a beautiful day ahead. Take care. Thanks for screwing us today. We really appreciate it. We're glad your customer service was very quick to tell you you are screwed. Yeah, thank you very much. All right, let's put out a chat. Let's see. Welcome, everyone. Can I pin this in? Yeah, there we go. Thank you to those watching on Twitch. Appreciate it. Not doing so well on Twitch. That's like I say, it's a tough nut to crack there. Now you have to be a gamer. You have to be a hula hooper, hot tubber, feet person, or those weird people that the women kiss the plastic ears and guys listen to that. There isn't anything more weird than that. That gives you the chills. You're like, ugh. I guess that's the whole point of it. But anyway, it's strange. But those people make a ton of money. Check in with the DYOR Projects Telegram room. If anyone's listening here and they want to talk, want to chat, just come on to the DYOR Project Global chat room. Let's see if I can get all right, so what else is going on? Oh yeah, I promised a couple of people that have tuned in before. Yeah, I'm going to hold that one for another day. That's more of the banking stuff, and the banking stuff is a whole episode by itself. But we are going to go back to the good stuff. But actually, first we're going to do a quick check of my favorite thing. Like I always say, it's baseball season, so we're going to give everyone a quick update in the Chicago Cubs. And it's not looking good. Third place for the Cubs. You can't see this. It's on behind me here. But anyway, the Cubs are basically 500 average. Started out the year hot. We're in first place for a while, winning every series they were in. And then the bad things started happening. Anyway, their loss to the Cardinals last night, 3-1 at Wrigley Field. Not a good thing. On Thursdays, when we talk crypto and baseball in depth, we'll cover the Cubs more about that. And I just broke my pen. This morning's going great. All right, everybody. Normally I end this at 10 o'clock, but because we got to send everyone over to the Crypto Lifer, this morning I'm going to go a little later than that. We're going to talk about what's going on with the SEC and Coinbase. Very interesting, and in my family, we like to talk about the quirks of constitutional law for some reason. My sister's a lawyer, and my dad's a smart guy. And a lot of times when we all get together, we end up having a few drinks. And next thing we're talking about is Supreme Court cases in the kitchen after a couple of martinis or old fashions. And the people not in the conversation just kind of roll their eyes like, oh, what are they talking about? And of course, I'm not a lawyer, neither is my dad, but it's just fun. And as good Americans, debating the merits of certain aspects of the Constitution is things that people do all the time. No, they don't. But we're nerds, so we do. So it brings up the fact that there's a little part of the old brain here that understands the origins of the Supreme Court, its power, and kind of what drives, I guess the best way to say it is what drives different parts of the government to do different things, either legally or within their realm of authority or outside their realm of authority. And one of the things the SEC is supposed to do is supposed to regulate the markets that are under its purview. And it's not supposed to regulate the markets not under its purview. The SEC's rules operates are set by Congress. And those rules have been tweaked by Supreme Court or lower court rulings, many of which got up to the Supreme Court. And so the SEC operates under laws set by Congress, and how the various court systems have interpreted those laws. Some, over time, some have been thrown out. Some have been constrained, saying, no, you guys can't do that. Or it's been expanded where they said, yeah, Congress said that, but they weren't too clear, so it covers this, this wide area of stuff instead of the small area of stuff. And what the SEC has been doing, now this is obviously a lot in my opinion here, but what the SEC has been doing is saying, you companies are not following the law. You are operating outside of the influence or outside of the regulatory scheme, and you crypto companies are bad. We need to regulate you, but we're not going to tell you how we're going to regulate you. We're just going to come in with enforcement and say that you're doing bad things. And we get that. We get that. The problem is that two things. Like I said, the SEC operates under its rules, long settled law, and the rules given to it by Congress. The crypto companies are all new, and it's not exactly the same thing that the SEC has been regulating forever. Yes, you can say, and we go back and forth with this with our Audit Chain on the Brink series of podcasts, that security is a security. Doesn't matter how you camouflage it. Doesn't matter if you're new and say, I didn't know. It's still a security. Hold on, my desk is a little out of sorts here. And thus it needs to be regulated. Okay. So then crypto companies went to the SEC and said, all right, we're going to register. And then the SEC said, nope, we're not registering any of you. And then crypto companies went, okay, well, we still have to do this because if you're not going to register us or tell us exactly how we fit into your rules, we still got to proceed. The customers want it. We're going to go for it and try to get Congress involved, try to get the market involved, do whatever. Then the SEC comes out and says, no, we're just going to enforce our action against you for not registering. They say, but you won't register us. It's a catch-22. And catch-22s in government are not allowed to exist. The general idea is where there is a government action that's supposed to happen, if it doesn't, there's a legal remedy, and there's a legal term for that. But if there's a thing that exists, there should be a remedy if the thing goes wrong or doesn't exist or it doesn't happen. And so, as we all know, we watched a couple of months ago. We watched Brian Armstrong, I think that's his name. Armstrong. That's Brian. The CEO of Coinbase, basically sit on CNBC and just sit there meekly and say, we're trying to work with you, SEC. We really want to work with you. Just let us know. Just let us know what you want us to do, and we'll do it. If you tell us we need to do this, we'll do it. We've got plenty of money. We can redo our company. We can redo the exchange to fit the rules and regulations. And the SEC, all you heard from them was crickets. Nothing. I remember watching that. I'm like, this is bad. This is bad. That means the SEC is getting the lawyers ready to come out, do bad things. Guess what happened? Yeah, they did bad things. Hello, Passive Income TV. Are you on every day? I try to be on every day, but life gets in the way. But trying to get back on, as they say, back on track here after being gone for a month, getting married and being off. Trying to be on for an hour every morning to get community built. Anyway, I'll come back to you. I will come back to you. But anyway, so the CEO of Coinbase was sitting there on CNBC just going, just tell us what to do. And the SEC said, nope, we're just going to send you a Wells letter and say you're likely to have an enforcement action. And on one of my shows a while, I think in March, I said, man, it's just getting to this point where the government won't do what it's supposed to do. It's just being quiet. They need to file a writ of mandamus. And I just said that casually. And sure enough, I'll take credit for the legal team at Coinbase listening to me. We know they didn't watch me. Anyway, so what Coinbase did is they turned the tables and they sued the SEC in federal court, asking the court to issue a writ of mandamus to the SEC to force them to do their job. Coinbase sent a list of 50 questions to the SEC saying, do these 50 things fall under your purview? If so, what are the regulations for them? We think they fall under these rules here, but they're not stocks, they're not equities, they have different accounting that you mentioned, so it's not exactly, it's apples and oranges. It's all fruit that needs to be regulated, but it's apples and oranges. It doesn't do anything. And when you try and register with the SEC, what I've learned from talking with Jason from Audit Chain is that it's very detailed. It's very detailed and has a lot to do with your accounting and financial reporting. Not so much your product. It's about 80% your accounting and financial reporting, and that end of it. And the accounting and financial reporting for crypto is different than stocks, equities, municipal bonds, all that type of stuff, and doesn't fit nicely into the check mark. So what you're going to do is exactly what happened. You're going to go to register, and the people that do the work at the SEC will be like, "No, none of this fits the check boxes here. I can't. You're not registering." And it's not that they're not trying. It's not that their products, are just these crazy illegal things. The system's just not working. And so the SEC threw its hands up and said, that's it, we're done. Hold on. Yeah, sorry about that. Voice camera problems too. Anyway, so as I was saying, it doesn't fit that well into it. So the SEC threw its arms up and said, we can't register you. The other part of the SEC, that's the enforcement side, said, hey, these guys aren't registering and they're doing things illegal. We're going to bring enforcement action against them. And they've created absolute havoc in the market and are, in essence, causing companies to leave. A good example is one of the biggest trade shows going on right now in the crypto world is the Dubai FinTech exhibition and conference going on in Dubai right now. And it's packed. It's packed. And the leader of Coinbase and pretty much every other major exchange in the U.S. has been seen over there talking to the regulatory authorities who are giving them open arms, saying, come on, guys, come on over here. Bring your business, bring your money, set up shop. We'll set up a nice framework for you guys to operate. And just bring your business. We'll do it. Whereas in the U.S., they're saying, nope, you can't do it. And we've seen. I used to live in Dubai and in Abu Dhabi and over there, and they are very good at setting a level playing field for business. Easy to set up a company, clear rules. But like any country, there is a bureaucracy involved, but it's quickly being solved by internet and online type of things. But what they're very good at is taking jobs away from the U.S. Very good at it. They have these things called the free trade zones over there, and I used to work in one of them. Every day I drive by this giant General Motors spare parts warehouse. And finally, I end up meeting another expat that worked there. And I said, man, you guys, you keep making that building bigger and bigger and bigger. And he said, yeah. He said, we keep, and this guy, I think he was South African. He said, we keep closing parts of our spare parts supply chain in the U.S. down and moving it over here. And I said, well, and GM sells parts all over the world. He goes, no. He said, no, we're selling these parts in the U.S. I said, you mean it's cheaper and more effective to have it in a warehouse in the free trade zone here in Dubai than have it outside of Detroit? He goes, oh, yeah, it's much cheaper here. He said at the place there, we had to employ like 10,000, 15,000 people in the whole factory, not factory, but warehousing system and logistics. Here we operate about 2,000 people. They're way more efficient. It's less expensive, yada, all these types of things. It's cheaper to do everything, have all the parts made all over the world, send it to Dubai, and then air freight the stuff to the U.S., to warehouses, smaller regional warehouses to deliver to the dealers. It's just ridiculous. But they're very good at doing that, and they're starting to do that with crypto. And they're seizing upon the confusion from companies not getting strict understandings of what's going on from the regulators. Coinbase is pursuing two actions. One, moving out of the country, which will eliminate a lot of their U.S. user base, but will open them up to a much larger user crowd than the rest of the world. And then the other thing is they're taking action against the SEC. As I was saying, they sued them, asking for this writ of Mandamus. Now I'll go into what that means. A mandamus means it's a Latin term for saying you need to do this, and it kind of originated mostly in Old English law before there was a strong parliament. The kings would just tell someone, you need to do this, or you're going to go sit in the London Tower for a while. And the court, not the courts in England, but the King's Court would issue a letter, a note, a writ of mandamus, whatever they called it back then, saying, individual, you need to do this, or the king's going to come with his guys on horses and give you a whole bunch of trouble. And it's still used in most English-speaking countries in a little different way, and it's used in the U.S. In a different way, not just the government saying, you need to do that, but more as a legal remedy to make sure parts of the government are doing what it's supposed to. And so what Coinbase is saying is the SEC is not doing its job as defined by Congress. It's supposed to give guidance and put regulations in order, and it's supposed to answer our questions on how to regulate us. It's not just supposed to be a police agency. And the SEC is acting like a law enforcement agency. They're not. They're not a law enforcement agency, and they're not an organization set up to do that. They were set up to guide the markets and regulate them, but make sure everyone does a good job and be like a cohort and a friend to everybody. Say, let's do this. The SEC is mostly run by the large banks because the employment door just goes round and round and round and round. And in order to get a much higher job at the bank, you go work for the SEC, get some experience there, get the political things, come back to the bank at another level, and then go back to work for the SEC, and then come back, and next thing you know, you're running the bank. That's how it works with government jobs. People cycle in and out, and in the end up with the industries that they govern, end up having an outsized influence on them because people that used to work in industry now work for the regulators. Yada yada yada. Coinbase says, you're not doing your job. You are not doing your job. And if a government agency is not doing its job, it can file for this writ of mandamus. And the court said, you know what? You are right. You are right. We see some merit to this. And the court ruled, and what this is telling us behind me here, it isn't saying that the SEC has to do anything for Coinbase. And what it has to do it started the process by saying, hey, you need to respond within 10 days and tell us why you're not responding to Coinbase. And then we're going to take that information and either force you to do your job or back off. But the process has started. And it's interesting because the constitutional law part of it provides that the court system, namely the Supreme Court, in its original jurisdiction of settling the differences between the states, dealing with diplomats and other foreign jurisdictions that are acting within the United States, and the original jurisdiction meaning that they can take the case first without going to appellate courts, and really this writ of mandamus came about not as something that was in the original Constitution, in the Constitution, or in the original kind of notes, rumblings about what the court's supposed to do, but it ended up in a Judiciary Act of 1789. And this gets a little into the weeds here, but it's interesting because there's been very few times in the history of pretty much any government anywhere in which an arm of the government said, you gave us too much power, and we are giving it back because you didn't have the right to give us that power. And thus, it's unconstitutional. It's illegal for us to have that power. And the writ of mandamus thing kind of started with the famous court case that set the legal precedence for half of what's going on in the United States now, the Marbury versus Madison case, in which I'm not going to get the details right off the top of my head, in which James Madison was the president of the United States, issued a bunch of, lost the election to Thomas Jefferson before the inauguration, issued a bunch of court appointments and government appointments, including one to Mr. Marbury, who to be a U.S. Marshal. And not all of them were hand-delivered. This is getting into the details. But anyway, Mr. Marbury didn't get his appointment in the mail or hand-delivered by the government until Thomas Jefferson became president. And Jefferson said, nope, we're not sending those out because I want my own guys to have these appointments. And Marbury sued. And the Supreme Court, the famous John Marshall, said, first of all, the act of the president signing it and stamping it, that meant the appointment was good enough. You don't have to deliver it. That's all BS. He said, but second of all, Mr. Marbury, you're asking us to get the president, the executive branch, to do something that it's not supposed to do, or that it didn't want to do, but it's supposed to do, which is all fine and dandy, except that it's unconstitutional. And they set the precedent for judicial review on that case because what John Marshall said is, yes, we can do a writ of mandamus and tell other arms of the government, agencies, individuals, to do their jobs, but we can't tell the president what to do because of the separation of powers clause in the Constitution. And that little history is what I'm telling you about, is given me and other striking family members the impetus to talk about constitutional issues. So the Supreme Court of the United States actually said it was illegal for Congress to give us this power because in the Constitution it said the Supreme Court can only do this. And you can't just pass a law to give us more power. You have to change the Constitution through that process. And they didn't do that. John Marshall said, nope, can't do that. We can't order the president to do anything because of the separation of powers clause. You also don't have the power to order us to tell the president to do anything because that was not given to you by the Constitution. But we do have the power to tell other groups what to do in this writ of mandamus. And that's lingered in the background for years, and the legal community argues about it all the time. And we are here with now it being used against the SEC, which is not an arm of the executive branch. It's an independent agency of the government set up by Congress, but does not run under the legislative branch, operates on its own. So the Supreme Court or a lower federal court can say, hey, if you don't have any other remedy, there's no law that says if you're not getting an answer from the SEC, you need to do A, B, and C. There's no other remedy involved. So you can sue the government agency to say you're not performing your job as you're supposed to, and the court can listen to your argument and say, we are going to enforce that and say, yes, Mr. SEC, you need to do what you are doing every day and continue doing it and do it even for this client or person or agency or whatever. And we are going to see how that turns out, because cases of original jurisdiction in the United States are very rare. They're very, very, very rare. Even when there's an argument between the states, the Supreme Court can take it up directly, but they rarely do. They rarely do. They can assign it to a lower court. They don't have to take it. They can say, yeah, that's good, but we'll let the circuit court in Florida take care of that hanging chad issue. Or they can say, the circuit court's going to screw this up. We want this. And that was a case of original jurisdiction. It was the Bush-Gore hanging chad law or fight got to go directly to the Supreme Court because, in essence, it was saying the people sued saying, wait, Florida's, it's not fair for the people of Florida to have against these states, yada, yada, yada. It's not a fair, blah, 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 blah. If we're going to do a recount, do a full recount on everything. And they didn't do that. They said, nope, halt the process. Anyway, I digress. I digress a lot. But this has been a good conversation about... What else can go wrong? The fire alarm test. Unbelievable. Oh, everybody. Interesting day today. The fire alarm's going to go off in the background. I'll try to mitigate it, but I have a condenser mic here, not a dynamic mic, and so the condenser mic picks everything up, including probably my barking dog in the background. Oh, good Lord. There it goes. And we're going to take this time to talk more about nothing. Oh, I live in a high-rise building here in Ottawa. This is what you get. This is what you get. Normally, they post the fire alarm schedule. They post that schedule in the elevator. I checked. Didn't say there was going to be one today. Check a lot of things before I go live. As you content creators know, you can't check everything. We're going to take this opportunity to go and check the comments. Anyway, so that you've learned a little bit about the history of Writ of Mandamus, how it's used in the United States here from the late 1700s, and now how it's being used by Coinbase to force the SEC to do what they want, or not necessarily do what they want, but to perform their job. Perform their job. And I got to say, we're all really frustrated with the SEC. I mean, it's just a classic example of the wrong people in the job at the wrong time. And there's 5 SEC commissioners, Gary Gensler and 4 others, and they all kind of vote on things. And right now, there's a 3-2 majority for people that like to do stupid things. And generally, they're older and more decrepit. We'll say that, to say that they're friends of Elizabeth Warren and that type of mindset is kind of where I'm going with that. Then the other 2 commissioners are younger, more progressive. Let's see if we can find them. Your SEC home. About commissioners. Yeah, can't really see it here. I'll try and blow it up. But Hester Price here. She's constantly on Twitter and in other places saying the SEC is doing the wrong thing. My vote is essentially not counting. And these people don't understand the new markets, especially Gary Gensler. Obviously, I can't speak about his knowledge of things and all that. Obviously, he's a very smart guy to get to the top job in the SEC. But still, when you hear him talk about this great crypto industry, you're just sitting there, what? Is this the same industry I'm in? And not only that, the outsized influence that they're giving to the crypto industry, like it's this giant thing that's about to collapse the economy. Remember, the whole market value of crypto is less than the real estate value of Manhattan. Think about that. The whole thing, the total market cap, when you go to that chart, see the total market cap of all crypto, it's less than the value of the real estate market in Manhattan. It's a very small thing going on now. Obviously, it's revolutionizing things and taking over the world, but it's a very, very small thing. And they're giving it the attention that is outsized to it, when what they should be doing is just setting some basic level playing fields, saying, look, for the next 5 years, we're going to do this, try and figure this out. We're going to regulate it, but we're going to set these rules and regulate it and see how it goes, see where it goes, see if people are getting defrauded, see if companies are doing things with the best interests of the investors. We're going to do things to ensure that everybody has a good time here, at least set the ground rules for that to happen. 5 years from now, we'll readjust. We'll make things more regulated, or we'll make it less regulated. Instead, they're just coming down with the hammer. Kabam, kabam. You crypto companies, which has never worked. Even with my analogy earlier of going back to the old English kings and all that. Did it ever work when they would just go beat the heads into people? No, didn't work out so well for them. You know, for short periods of time, it worked out great. Worked out well for Henry VIII for a while. Did it work for Edward the Confessor? No. Didn't work out so well for him. Did it work out for... I'm not going to get a discussion of English monarchy. That's beyond the scope of this show. But anyway, looks like my crypto lifer feed failed. Let's try and fix that. So I'll wrap this up with a discussion about what's to come with the SEC. And in a few days from now, the SEC is going to respond. It's going to respond to, respond to the court, I should say. And with an answer, why is it not responding to Coinbase? And I'm guessing, it's my opinion, that they're going to say, we don't have to respond to them. And Coinbase is going to say, yes, you do. We're trying to register with you. You won't register us. We're trying to find out. You're telling us that these things are securities and we need to register. You won't register us. Other parts of the government, namely the IRS, are saying, hey, this is property, just like a house, and not a security. Or we're going to stay, or actually the IRS is staying away from the word security. They're just saying, hey, this is property. You just need to claim it just like you're buying and selling any other property, which does change the idea of things. And the Commodities Futures Trading Commission, Commodities CFTC, is also given a little different guidance on things. And so Coinbase could quickly become in a spot where they're working with one agency, and then with another agency they're being enforced on by doing the same thing. And that can't happen either. So the SEC will respond, then the court will take a few days. They usually do these things pretty fast because they don't want these things to drag out. They just want to get it done and to let the legal system start the process. And the SEC is going to say, well, we don't have to respond to them. They just need to follow our rules because they're a security and everybody knows what a security is. Coinbase will say, yes, but we have all these questions, and the SEC will get back to them and say, here's the law, read the law. It's not our job to interpret it. It's your job to follow it. And then Coinbase will throw its hands up and be like, We tried. And the court will issue a writ of mandamus telling the SEC to respond to them and to do their effing job. That's my guess. That's my guess, ladies and gentlemen. Well, I hope my describing this had a little had some effect on how you understand this. Let's before we take off for the day here, let's give a shout out to everyone watching. Thank you for everyone that watched on YouTube. Appreciate it. A couple of comments today. Thanks for everyone that watched in Striking's Crypto Smackdown. I didn't have the two-way talk enabled there because I had it enabled over in the DYOR project room. And thank you to everyone who watched on Twitch. On Twitch, we got 14 people at one time watching, and that's the most I've ever had with this DYOR live. Thank you very much. In fact, that's more than I had on YouTube today. Appreciate that to everybody. I will be on the air tomorrow, May 10th, Wednesday morning, with a crypto topic. I haven't figured out what it's going to be yet. I do know that Thursday it'll be a crypto and baseball talk, a little bit more casual thing. And Friday will be a wrap-up day, talking about the week in general and what's to come next week. Generally how I like to do it. Oh yeah, I gotta give a plug here. Where's my... Anyway, if you like good internet radio, let's give a plug to a friend of mine here. Some good internet radio. Go to Jimmy Heck's Hecktown Radio, hecktown.ca. Jimmy is a friend of mine who has an internet radio station. He's live on Thursday and Friday nights. His website, hecktown.ca, has his schedule during the week. He's on 24. His radio station plays 24/7, but he's live on the microphone Thursday and Friday nights. Let's see if he has the schedule here. Oh, yeah. This is all Eastern time. 6 to 8 o'clock, the Rockin' Random Thursday, in which Jimmy plays fun rock and roll songs that he loves. The Friday Night Kitchen Party is a discussion with Jimmy and his friends. And sometimes late on Friday, he does an After Dark show as well. Good conversation. Jimmy's got the voice for radio. Let me tell you, when you hear him, it's like it's a voice I wish I had. The voice I wish I had. He has that deep soap opera doctor voice and Radio Town voice. I don't have it. Anyway. Let's see if we can move to the next show. Thank you, everybody. We had a good talk about Coinbase and the SEC today and their Writ of Mandamus strategy that I think will be successful. I do. We recapped a little bit about the meme coins, what's going on with them. A good example here is this Turbo. Get out. If you're in Turbo, out, out, out. If you're in Pepe, out. Newt, out. Oh, there's too many of them. Baby Homer Simpson. There's a new Homer Simpson one. There's a new Baby Pepe. There's Pee Pepe. Like Lifer said the other day on his show, these things could go on forever. And apparently both of my feeds have failed also. It's been a great technical day. We had a fire alarm in the middle of the show. Gotta love it. Once again, my name is Tom, otherwise known as Striking, here in the DYOR media world. Thank you so much for tuning in today. We'll see you tomorrow.